All right, how's it going, everyone? Welcome to another episode of Forward Thinking Founders, where we talk to founders about their companies, their visions for the future, and how the two collide. Today, I'm excited to have an investor segment where we're talking to an investor about how she thinks about companies, breaking into venture, and everything related to venture capital. Her name is Jenny Fielding. She is the managing director of Techstars New York City. She's also a general partner at the fund. Welcome to the show. How's it going?
It's going good. Thanks for having me. Excited to be here.
Yeah, I'm excited to have you on and learn more about, all things venture from your perspective. I think to start, this is kind of how I start all these conversations. Venture is this interesting, career path. Breaking in is always kind of a wonky way. So I'm curious for you, like, how'd you find yourself breaking into venture capital? And then we'll kind of go from there.
Yeah, so it seems like VC these days, has taken on a life of its own, and people think it's kind of this sexy profession. But like many, it's pretty challenging, and many of us don't kind of come up in venture capital. And so I'm in both an accidental entrepreneur and an accidental venture capitalist. So started off actually, pretty corporate. So I worked at some big companies and then left to start a startup in 2006. Pretty much people thought I was nuts, rising career at a big bank and leaving to, work and start in my apartment and run a tech company in New York when there was no startup scene. So kind of fell into that typical empath founder, really building around a problem that I personally had and wanted to see solved in the world. And then kind of the corollary is after running that company for many years, getting acquired, working at the acquiring company, I just had friends, people that worked with me, for me, leave to start other startups. And, when I had a little bit of liquidity, I started, kind of angel investing in them. And so that was really how I started on the investment side.
So I appreciate you sharing that. So let's kind of start with in regards to where you're at now. So you are managing director at Techstars. I'm sure a lot of a managing director at Techstars New York, a lot of people listening know what Techstars is, but I think some may not. So I think to start, can you kind of give us an overview of what is Techstars and what does it mean, like managing director, New York? Can you kind of walk through what that means to someone that may be newer to the venture capital ecosystem?
Yeah, sure. So Techstars is an entrepreneurial ecosystem that supports founders at the earliest stage of their journey, not just with cash, although we do write a check, but really with things like community, resources, mentors, really kind of helping them access the full suite of what founders need. We do this through a program. So it's actually a 3-month program. Think of it as kind of like a boot camp where in normal non-COVID times, founders move into our offices. In COVID times, they move into our Zoom rooms. And we surround them with these resources. And really, our objective is, can we help you get a year's worth of work done in 3 months? And if we can, through this kind of ecosystem, then we feel like we're making a big impact. So as MD of the program, I run kind of the New York ecosystem. We run the program about every 9 months in New York. But then you can imagine we have tons of founders. So Techstars has invested in over 2,500 companies. And so many of those founders are living in New York. And so as the MD of Techstars New York, I really also kind of help create the foundation of the New York community.
So that's super interesting. I want to dive into that a little bit because I think that, at least from my perspective over in Phoenix, but I can kind of see through the internet that New York, the startup scene in New York has been blossoming and blooming over the last decade, and tons of great exits for the ecosystem. Curious for you, how have you kind of seen things change from your perspective when you first kind of got in there to where it is now? And how do you also kind of see your maybe formal responsibility of being, managing director of Techstars New York, but also as a person living in New York, how do you kind of see as you're just as a citizen or resident of New York, how do you kind of see it from that perspective? And just what's it been like being in New York for the last decade, watching it grow?
Well, 2006, most of my friends who were people, that were working at McKinsey and at Goldman and all these places, thought you were nuts to leave a job like that to start a startup. And fast forward now, and pretty much it has become a very popular trajectory. So how did we get here? In 2006, everyone said, if you're going to run a tech startup, Jenny, you need to move out to Silicon Valley. And I looked around and I thought, well, that's interesting. New York City has a lot of things that really, I think, could support a startup here. We have incredible technical talent. We have some of the best universities in the tri-state metro area. Definite tech talent. We have tons of capital, right? So maybe we don't have a lot of venture capital in 2006, but we had a lot of rich Wall Street guys and real estate people. So there was a lot of capital here. Every corporate has a headquarter here. So we've got, tons of corporates, which, for B2B businesses is customers, right? So we just have like all these great things. And I thought, you know what, this is where I want to run my business. But like, we didn't even have co-working back then, right? And so, it was pretty nascent. And so we've seen the ecosystem develop. I think, early companies that were maybe more media focused or consumer companies. And so kind of that first iteration of tech where people said like, okay, yeah, like maybe you could build an Etsy or, a Tumblr or something that's very consumer, but, New York doesn't really have deep tech chops. And now we've seen that change. And so we're just kind of seeing the layering on of New York of new verticals and new areas of expertise. So today, I really think any type of company can build here. In fact, in my portfolio, I am lucky to have 2 unicorns that have gone through my Techstars programs. One is called Lash, which is a deep tech company. It's an actual physical hardware. And Chainalysis is a data and analytics for crypto exchanges. So, you can think of frontier tech. So we've seen now unicorns start to grow up in New York. Both those companies did not start in New York. They moved to New York for our Techstars program and then built their headquarters here. And now we're seeing those companies blossom, founders, and we'll be, investing in other companies. People are leaving those companies, starting other companies. So we see the ecosystem, the cumulative effect of the ecosystem, which is really exciting.
And you mentioned that you invested in those $2 billion companies now. One, congratulations, that's awesome. I'm sure you invested in plenty more that hasn't been seen yet, right? Because they're still growing. But I'm kind of curious, when you decide to make a seed check investment, specifically on the Techstars side, and then in a second we'll go over to the fund. But for Techstars, what are you looking for in founders or in teams or in opportunities? Because you're in New York, you see a lot. So how do you filter and how do you kind of end up picking the teams that you do?
So that question is interesting because I think, I'm an investor, but I'm also, an operator as the MD of Techstars. So I'm actually creating a community. And so although we're looking for like all the normal things that investors look for, big markets, moats, all these types of things, we're also looking for a founder that wants to be part of something bigger than their own. And so we're looking for people that are collaborative, that are, open to feedback. The Techstars program is mentor driven, meaning that over the course of the 3 months, every founder will meet over 100 mentors who will be giving them feedback on their business. So we are looking for a certain DNA of founders who have a learning mindset, who are resilient, right? Because they're getting a lot of feedback. It might not always be positive. And so those are some of the things that we're looking for in addition to, kind of the traditional investment thesis, which is, definitely large markets, growing markets, defensible tech, things of that nature.
Cool. And then I have one more question on this side, then we'll move over to the fund. And I wasn't planning on asking this, but you mentioned it, so I'm actually very curious. You said when New York first got started with the startup scene, there wasn't that much venture capital, but there was a lot of capital because it's New York. Do you find that like this capital is now like interested or has been becoming more interested in being LPs and VC funds, or how have you seen like the migration of old school Wall Street finance moving into these emerging markets like venture capital? Like, do you see that migration happen?
I mean, it's an interesting question. We are seeing the last number of years, we saw, hedge funds launch venture capital arms, PE funds as well. We see growth funds now dipping down into earlier stage. So I think that there's like a real kind of melding of asset classes these days, which is pretty exciting. As for the old school Wall Street people and the real estate people I mentioned, what was interesting is when I first started my company, all the angel groups were made up of those types of people, right? And so when you pitched an angel group, oftentimes their frame of reference was quite different, right? Because they weren't necessarily as accustomed to, say, high growth startups. And so, you'd be at an angel pitch and they would, be asking for your financials and you're like, I just want to grow audience. And they'd kind of scratch their head, right? Because that wasn't necessarily the mindset. I think everyone's kind of more familiar with tech now. We feel more comfortable with it. And so I think they've changed the mindset. But yeah, I mean, if you look at the high net worths who are investing in funds like mine, yeah, many people who've made their wealth in more traditional areas are now saying, I'd like to diversify. Especially with the market dynamics, getting to something that is high growth and has some yield is exciting.
Yeah, we have this issue in Phoenix, and Phoenix is 17,000 decades, I would say, behind New York City, I think, in this sense. But like we have a lot of real estate money here, so there's actually a lot of money, and there's a small effort of trying to get that real estate money into venture capital. But we're working on it. For you, so you're doing Techstars, you're investing in companies, but you also mentioned that you are the GP, general partner at the fund. What is the fund? Is that part of Techstars? Is it outside of it? Kind of what's going on there?
Yeah, so about 3 years ago, as I was running my Techstars programs, companies like I mentioned, Chainalysis and others, were going through my programs, and they were actually coming out. These are really good companies, and they're having trouble raising that first round of capital. So I started kind of scratching my head because at this point, New York's second largest tech ecosystem. Everyone's talking about how much money is here, and I'm saying, like, why are my companies taking 6 months to raise $750,000? This doesn't make sense. And so, as you peel the onion a little bit, what we noticed was happening was the most of the seed funds that maybe had started as 10 or $20 million funds had all moved upstream, right? So they no longer were writing 100K, 200K checks. They're writing 1.5 million into $3 million rounds. And so with that, the average seed round in New York has blossomed, maybe, or maybe sometimes we call it bloated, to about $3 million, right? And so who's writing those first checks? And there are a bunch of first check funds, but not that many. And I think I'm an investor in many of them. There wasn't enough to support it. So I got together with some of my founder friends, people that had started kind of iconic companies in New York, and said, we're all seeing lots of deal flow. We're all really only writing like 20K checks. What if we pooled our capital into a fund, and locally we source deals? Locally, we mentored companies. Locally, we help diligence these companies, and let's just invest in all the cool companies being built in New York and support the ecosystem. So it started off as an experiment. The first fund was, I think, about $3.5 million. And we invested in 50 companies. And yeah, we were kind of on our way. What was interesting about it is that over that time, we started getting inbound from founders in like all over the world, basically saying, hey, could you set something up here? Like, we really need that founder DNA, all founders investing in founders. And so mid-pandemic, we decided to raise a fund. Interesting timing. And so now we've expanded the fund into different geographies. So we have LA, we have London, we have the Midwest, we have the Rockies, and we'll be launching probably 3 more this year, all local founders investing in local founders.
That's awesome. What a cool initiative, but not even an initiative. What a cool way to just spread wealth and make so much wealth and help the world, right? What a great thing. I'm kind of actually curious there. You mentioned you started that during COVID, or you raised that fund during COVID. And I want to talk about COVID for a second, because holy moly, COVID as a event in the world did so many horrible and great things depending on where you are in the world. But specifically for tech and startups, at least for the internet, it kind of like everything kind of blew up. And the entrepreneurial activity, in my view, went through the roof. I'm curious, what have you seen? Just, I'll leave it kind of an open-ended question, but what have you seen in like venture capital in startups since COVID? And how are you like thinking about your job now that COVID is like kind of going? I mean, it's going away for sure, but will the effects go away? No one knows. How do you think about these things?
I mean, when it first kind of hit, I think everyone thought that it was just going to be a disaster for tech companies. And there was a lot of, calls for belt tightening and getting back to fundamentals and leaning the team. And I think we were all kind of surprised that, the market didn't really go down. Part of that obviously is fueled by the stock market and people's access to wealth that are investing in these companies. Part of it is just based that venture is a lagging indicator, meaning that we've all raised our funds already for the most part, and so we have capital to deploy. for us to call our management fees, we need to deploy capital. So if we stop investing, mostly, investors aren't, or the GPs aren't getting paid. So, I think with that confluence of things, we definitely were okay. But why we were more than okay, and why it seems like, right now there's kind of a fury of getting into startups and investing in startups, I actually don't know, because it does seem pretty bubbly to me. So I can't really give you a lot of economic analysis there, but I have not seen it like this in a few years.
Well, I feel like anyone that can give like an economic analysis on what's going on right now is lying, because I don't think anyone knows what the heck is going on. Like, I mean, you just go on Twitter, which is like the new it feels like the new Sand Hill Road. Like you just go on Twitter, that's where all the activities are and everything, and it's like just blowing up, and it's all good. Like I actually think it's all really good for the world. It's just kind of hard to understand why that's happening and what that means for the future. So I appreciate.
Side, I mean, the good part is, I mean, if you look at cohort data for, some of the best performing companies like Uber and Airbnb, like they did start in downturns. And so it is an exciting, with a lot of instability this year, it is a great time to start a company, right? I mean, you can get talent, right, in the way that you couldn't. There's a lot of talent available. So there's a lot of resource available. And I think investors are not stupid. They know the data, and so they were leaning in to companies that are being built in trying times.
Yeah, I followed my nose on that one. I was working for a YC company, and I quit in August because I'm like, this is the time to start a company. So I just quit and started a company, and it worked. It's working out. It was the right call. But it's you're right. Like this is like that. This is when in times of uncertainty is the time to kind of lean in. Cool. So a couple more questions for you, and then we'll call it a day. So you going back to the fund. So you're almost in some ways building almost startup communities and these different hubs, like founders funding founders. What tips do you have for either those communities or communities like Phoenix or like Salt Lake City, or just like much smaller communities, about building great startup hubs? And what have you learned from building up New York that you could pass on to maybe less mature ecosystems?
Yeah, I mean, I think that founders that have come before are kind of the golden ticket of knowledge, capital, just everything good. And so I think if you can build, generations of founders, that's where you can really kind of get to scale. And so New York is now kind of at that point where we actually do have some generations of founders. Like I sold my first company in 2010. A lot of that money has gone back into the ecosystem, right? Because like many people that are in tech, we are addicted to it, and it's where we put all of our money. But I think for new communities, once you kind of have a few companies that are, starting to get some success, you really gotta, get to know those people and really kind of wrap them into something that feels like a community, right? Because they're the ones that can be mentoring the next generation, that can be fast tracking, those founders to the information that they need to get going more quickly. So I really do believe that that apprenticeship model is what kind of kickstarts different ecosystems. And then of course, like, it's a great, corporates that can do their part. I think we've seen, some interesting initiatives around corporates who are not only putting in money, but that are figuring out ways to work with startups. And so many communities that maybe don't have a thriving ecosystem can really develop a niche in whatever industry is big, right? So so I see that happening in some of these kind of tier 2 and tier 3 tech cities, which is cool.
Yeah, absolutely. I appreciate you sharing that. So a couple more, kind of almost like quick fire style. What in regards to the markets, what out there is interesting to you, just in general, like not necessarily your RF, what is it, RFS, but like what markets or segments are interesting to you as an investor,
Yeah.
or which one, even if they're not hot, like what just piques your interest right now?
Yeah, I mean, I've always been interested in data and analytics, and where data analytics comes out of the dashboard and it really becomes around actionable insights. And so the areas that I'm excited about and where I see this applicable are in healthcare and in fintech, especially. So healthcare, obviously, massive market, and really we all understand post-COVID why this is so important. But yeah, if this information is tied up in the electronic health records and other places, they're not going to serve people, right? So data and analytics that can take it out and get it into the hands of consumers, I find super interesting. And the same with fintech, right? There have been many articles about how every company is now going to be a fintech, right? And so this idea that transactions and payments are going to be part of the stack of all companies, I think is exciting.
And then if someone in the universe, whether they're in Phoenix, Israel, Africa, Southeast Asia, anyone, if anyone's like working on these things, I guess I have two questions. If this founder is listening to this that hear you, they're like, this is great. I want to make it. I'm building in this space. What's one thing that you would give advice if there's a founder listening to this and they're first time founder, they don't know much, but they know they want to do something big? What is one thing you'd share with them that maybe they wouldn't get like on browsing Twitter or ever, once an hour or something like that? What's any advice that you would give to, a new founder?
Find a great co-founder and founding team. Honestly, like you just can't do yourself what you can do with other people. And so it's hard. Like don't find a co-founder just to check a box. Find a thought partner that you want to spend the next 10 years with, that you can build with, that you can go through bad times with and good times, because you'll just be so much stronger together. So I don't know if you can't find that information on Twitter, but I really believe strong founding teams are where it's at.
And then for my last question, if someone wants to learn more about you, Techstars New York, the fund, you personally as your own brand, where can they find you online, and what link? Just feel free to plug any links or anything that you're kind of working on for people to find you online.
I feel like I'm the easiest person to find. This is my third event of the day. So yeah, connect with me on LinkedIn, especially, if you have something very specific that I can help with. Follow me at JE Fielding on Twitter, send me an email, jenny.fielding@Techstars, really lots of ways. But really part of the advice is like, don't email me and say like, hey, can we go out to lunch or can I pick your brain? Like, what's the specific thing that I can help you with? And so I'm good at connecting the dots.
Cool. Well, thank you so much for coming on to the podcast. I think what you're doing is incredible. I'm looking forward to seeing how it all grows over the next decade. Thanks for coming on.
Thanks so much for having me. Super fun.